Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for June 7th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, ES showing a pattern here where it's made new lows here day over day, lower highs day over day. Right now, very narrow overnight range, just 5 handles, which is 43% of ADR. We've been trading about 11.65 points per day over the last 10 sessions. You can see down here on a 3-day range basis, we are below 65% of average 3-day range, which suggests that we are tightly coiled. We're seeing lots of compression of prices, and that could lead to a little bit of movement here. Again, if this thing were to push downward, all signs indicate a little bit more downside, perhaps as low as 17 to 20. That could provide a solid opportunity for bulls to defend and look to squeeze toward 24.59.75 to 24.64s. Any failure to hold the 24.17 to 19 zone opens up 2400 to 24.04 half, and again, that's another zone where bulls looking to defend the trend will want to come in and defend. So continued overall strength on a swing basis as long as price remains above 2400, but short term we may see a little bit more weakness here into these targets, and this would be an opportunity to defend, and if we see this zone, it would also be an opportunity to defend. So that's the swing outlook right now. We may see a little bit more downside ahead of those buying opportunities. Let's take a look at the intraday time frame here. On an intraday basis here, if we squeeze this up, you'll notice that price is coiled very tightly within the last session's range. We've gotten a lot of tightly coiled price action like this here, and you can just see how this thing is just really trading within a small price range. 34 here, 27 here, not even. And so that tells you right now that prices could see expansion out of this range soon. Above 36s here would open up another continuation above 2440s, but overall this thing has been pushing lower on a last several day basis. So if there's any failure to hold above these highs, 36, 37, any push into that area could be an opportunity for bears to trap and return back toward lows and perhaps fresh lows. So that's going to be something to watch here early in the day. All right, let's take a look at crude oil. Here's a look at crude. We'll go into the higher time frame first. The daily chart shows that price continues to trade around VPOC. So VPOC is 48.74. That's VPOC right there. That's CVPOC. We traded a little above it, broke below it, and now we're trading a little below it. And this is what I mentioned before when we were sitting in this area. I said this now, after this move is complete, and now we've seen this push back to value, it could get a little choppy in this area. It's not the best zone to trade around on a swing basis for the most part, because you may see this thing gets trapped around VWAP. So we've seen about 4 days here where we've traded below it. We got a little inside day working here. I would watch 48.42 very closely, because a stop run day above it could be a huge day that brings price back toward 50 to 50.20. So that could be a big move up. It may happen today, tomorrow, we'll see. But again, if price starts to push through 48.40, all of these late sellers that got in down here will fail to get paid, and then their stops will influence the next momentum move up back toward 50.20 to 50. So that could be a big one-day push up. So keep that in mind. Again, it's going to happen above 48.42 if it does happen. If price were to push above that area and fail to hold, and there'd be a false breakout, then again we'd be looking for 45.20 down below as the next target. So that's the pivot that we're going to be working off of. It's going to be 48.42 for a shot at one of these next two targets. Alright, so on an intraday basis right now, you'll see price is coiling tightly as well. And we have a very tightly formed range here with a clearly defined support. About 47.74, you can see support. Lower highs, so that means that these bulls are getting paid less and less. That usually leads to a break downward. So keep an eye on support here, 47.74. Bulls right now trying to keep it bid. Any failure to keep it bid opens up 47.24 on a short-term basis. Any push through 48.10 and a hold suggests a continuation higher. So right now, very narrow range coming to a head here as we likely see expansion ahead. All right, let's take a look here at gold futures. Gold in the higher time frame has continued higher. That's something we've talked about before. Very, very solid move that we've seen ever since price pushed above 1240s. Here's the squeeze day. Very, very bullish. Pullbacks into the mid were defended. Failed new lows like this led to pushes higher. You can see 1260 continued to hold. That was the level that I mentioned. Bulls want to keep bid. Again, another failed range expansion to the downside led to another squeeze up. We are now at new highs beyond that prior pivot high. And what I've mentioned before is look for price to push beyond that high by some measure. Perhaps as high as 1305, 1306. Get above that high even. And then if there's a failure to hold above that high and continue, that will spark the next return back toward 1260, perhaps down into 1240. So right now we have a large channel that's been building out. A push to new highs up here could lead to a rotation back against the range. I mentioned that yesterday, but now that we've hit prices above the new high, now we're in that zone where we're watching for signs of rejection. Any acceptance beyond 1300 would open up a continuation toward previous key levels here. But once we get above that 1300 and start to trade, it's going to build energy like this. And if those late participants don't get paid, the energy will be released back down in most cases. So we're going to keep an eye on that potential here as we move forward. One last thing here. In silver, we continue to see strength out of that trade idea. That was last week, Thursday morning here. Nice uptrending market. Failed range expansion to the downside. Friday, obviously, we had the trigger zone that was hit right between the mid and that recent key level that led to a nice squeeze. So right now, overall, any retest back toward the previous high here, even as low as 1740, any retest of that zone could still be an opportunity to look for bulls to look to defend and trap back toward 18s. So that could be a very solid opportunity here to look for ahead as a continuation toward 18s. But for right now, a very nice move higher off our trigger zone, and there could be another wave coming. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.